Welcome, everyone, to the inaugural Takestock Live Investor Webinar Series, which will happen every Wednesday at this time, 2:15 Mountain, through the end of June. 3 companies at a time, running approximately 40 minutes. I think most of you know me. My name is Mark Francis, and my next job is to give you our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Takestock and its principals, Raj Joshi and I, may have equity investments in companies we invite to present, make no representation or investment or other recommendation in regards to these presenting or any other companies, and you should do due diligence and seek professional investment advice. Some housekeeping matters. The chat board will not be utilized live in this session, but you can still type and send messages, which will be followed up on by the respective companies post-session. So please be clear as to whom it's addressed. We will accept questions for consideration up to 2 days in advance of each session. Raj?
Thank you. Welcome to the show, everyone. We'd like to begin by thanking the TMX Group, and specifically the TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. Thank you to them. We would also like to recognize and thank the vital support provided by our core sponsors: Fasken, MNP, Lead Jones Gable, Olympia Trust, Dealmaker, and the Canadian Securities Exchange, who helped us launch the forum all the way back in 2014, about this time of year. We'd also like to thank our supporters, the extended network that helps us make this new initiative what it is and is going to be in the weeks ahead, between now and roughly Canada Day. Thank you to Calgary Meg and CIM. Thank you to Sterling Merchant Capital, Sam Greer specifically. Thank you to Conduit IR, Derek Wood. Thank you, Investmentpitch, the Newswire, Kitco, and many others. Thank you all. Also, a quick reminder, since we're doing this weekly, same time, same place, up next week, Kara, our co-host, CHF Capital Markets, will be the following companies. I'll let you look up their symbols: HS, VIS, VSBY. So looking forward to that. We're roughly going to try to alternate mining and tech, etc., to give you guys a good variety of things to see.
Very good. Thank you, Raj. Today, we will have guests from 3 companies active in gold exploration and development. It is noteworthy that each of them have major projects with merit at gold prices lower than today's. Each company will have 6 minutes to present using their PowerPoint, and then we will have a panel discussion with some questions that have been prepared in advance. We encourage you to connect with the companies directly in order to get more detailed information. Contact details for the presenters can also be found on our website, takestocklive.com. I have known each of our guests, all professional geologists, for a number of years, and prior to them becoming CEOs. Robert Cameron, CEO of Commander Resources, Darwin Green, CEO of Highgold Mining, and Matt Turner, CEO of Rockhaven Ventures. So without further ado, let's start with Rob Cameron, Commander Resources.
Good afternoon, everybody, and welcome to the inaugural show at Takestock. So this is kind of exciting. So I'll introduce you today to Commander Resources and bring you up to date on some of our recent activities. It's a quick 6-minute snapshot of the company as we go forward. So I'm Rob Cameron. I'm the president and CEO of Commander Resources. We have the corporate disclosure is important. We don't have time to go through it in detail, but I encourage everyone to follow up on this forward-looking statement, which is important. We are exploration companies. Everything is forward-looking. Let's start on the presentation. Commander is unique amongst the 3 companies here today in that we're the early stage explorers. We follow what's called the prospect generator business model. There's maybe 20 to 25 companies on the Canadian exchanges that follow this sort of disciplined approach to exploration. And the main idea behind it is that there's a lot of risk in exploration, and we mitigate that risk by advancing our properties with partner-funded activity. So we run a portfolio of properties. We bring in partners that do the heavy lifting, the exploration and development stage of our projects, and we go along on a ride with a carried interest in the property. We always keep a royalty, so over time we build a royalty portfolio, and we get a little income from option payments and in the form of cash and or share payments. And so it's consequently we build a little investment portfolio as well. So currently Commander has 10 properties. 3 of them are already joint ventured out to some significant partners. We have 5 drill ready or advanced stage gold projects ready to seek partners, as well as some copper projects on the side. We're currently weighted maybe 70% in the gold value right now. As we move forward to the next slide, just a quick snapshot. I won't dwell on this long, but we are very tightly held, and we only have 35 million shares outstanding. We have warrants, 12 million warrants, which will expire next month. So in reality, we'll have a 39 million fully diluted number by the end of May. And there's the 2 principals. You could read them. Introducing myself and my VPX, Steve Weather, head up a lot of the exploration activities. So this is our property portfolio. As you can see, we're focused in Canada. We do have a solitary gold project in Mexico. The red dots are our projects. The white dots is the distribution of our royalty portfolio. The key points that I'll address going forward in the presentation will be the 3 solid red dots, which are joint ventures. The Hammerdown project, where we have a 2% royalty in Newfoundland. I'll spend some time on that. And then if time allows, I'll just give a capsule summary of some of our 3 top gold projects going forward here. So this is our top asset in the company, and it's sort of it's a foundational value asset that sort of underpins the valuation of Commander. We have a 2% royalty on Maritime's Hammerdown project. This is a past producing gold project in Newfoundland, and Maritime has just completed a PEA with the goal to reopening the mine in 2022 or thereabouts. We have a 2% NSR on this asset. You can see their conceptual mine plan on the left, where they're going to exploit the remaining ore that was left behind from the first round of mining back in the early 2000s through an open pit and combined underground operation. It's a very robust project. You can look up the details on Maritime's website. But the key takeaways here, it's a toll milling operation. So the capital costs for Maritime are low and manageable, and there's permitting costs are very low as well, because there's no tailings or mill to create. They just truck the ore down to a custom mill. That 2% NSR has a buy down provision of $1 million to take it down to 1%, which will happen sometime before production. This is a significant asset with significant future cash flow potential for Canada, for Commander, and it's really a core asset. And this is something that we've generated. This project was generated back in the 90s with Commander. We sold it once to Richmont when they mined it the first time. We sold it a second time to Maritime, and they're about to put it in production for the second time. And this will be a very core asset to Commander going forward. We have 3 active joint ventures. As you can see, the one on the left is with Imperial Metals. We call it the Mount Polley Brownfields project. The yellow polygons surrounding that magnetic image surround the mine site at Mount Polley in central British Columbia. Those yellow solid polygons are the open pits. Some of their zones actually are demonstrated to extend onto our ground. Imperial optioned the ground from us in November. They completed some surface exploration, soils and IP, and they plan to drill test some of these brownfields targets right adjacent to their mine operations. This is a great project that can convert into a cash flowing royalty fairly rapidly. And then the Burn project with Freeport-McMoRan is a grassroots copper exploration program in central British Columbia. Then our longest lived asset is our 3-year ongoing joint venture on our South Voisey's Bay project with 2 significant partners, Fjordland Exploration and HPX. And as you recall, HPX is Robert Friedland's private exploration arm. So we're looking for Voisey's Bay projects in a next intrusive complex south of the Voisey's Bay mine. And maybe Robert Friedland and his team will make a lightning strike twice on that project. And it's still active. 3 projects that highlight our gold projects going forward. This is brand new. We got a 27-kilometer long shear zone adjacent to past producing mines in the Pickle Lake camp. We just staked that in March. We have a nice gold project in the White Gold District called Flume. It's a 10-kilometer long soil anomaly right in the heart of the White Gold District, which is one of the more topical gold belts in Canada right now. And finally, as an example, we have an epithermal gold project in Mexico where we just completed a major geophysical survey. And that's really a summary of Commander. Prospect Generator, we live through our joint ventures, which advances our projects. 5 gold projects ready for partnering. And our deal flow builds out a royalty portfolio and grows our equity portfolio. And that will probably be our core valuation going forward. So thank you very much.
Yeah, I'm Darwin Green, President CEO of Highgold, and thanks to Mark and Raj for organizing this, and everyone out there who's tuning in. Forward-looking statement, check it out in your leisure. Moving a little too quick here. So, Highgold, we're a fairly new company. We listed in September 2019. We're focused on high-grade gold assets located in North America. Our flagship is the Johnson Tract project in Alaska. We also have 3 properties in the Timmins Camp in Ontario. As my checklist, well, when I look at evaluating junior mining companies, I want to see a tight share structure. It's important to know who's holding the stock. Do they have cash in the bank to execute their plans? And probably top on the list is management and exploration assets. We pride ourselves as a group that's technically strong and focused in jurisdictions that we know very well. As far as our assets go, if you're going to be spending the effort that it requires to find and advance an ore deposit, you must be looking for the very best, and that's what we're focused on. And then, as always, you've got to see some value to the upside if you're going to cut a check for somebody or for a company. So on the capitalization structure, we've got 40 million shares outstanding. We've got a market cap as of as of Friday, when I last updated this, about 46 million. We've got 11 million in working capital, and we've got a wonderful roster of shareholders. It includes big blue chip institutions, some name brand mining entrepreneurs, as well as a senior gold producer. So a wonderful balance of shareholders that are supporting us in what we're doing. Johnson Tract really is our flagship, and it's what I'm going to focus most on right now. It's a high-grade polymetallic gold deposit. It's a really neat opportunity. It basically sat dormant for about 25 years for no really good reason, other it was not really available or being worked, and it came our way, and we are bringing the first modern exploration to the project, and it's got tremendous exploration potential, but it also has a very, I guess, as a company, we've got a real running start because there's a very nice deposit there to begin with. As far as what it is, it would probably fall in the category of epithermal, and it's most similar to Hod Maiden. That's a deposit in Turkey. Geologically, it's similar. Grade profile, it's similar. And why I like it and why I highlight it as an analog is it's really kind of the ideal deposit. There's very few out there that will have an NPV of better than $1 billion, and at the same time have an internal rate of return of plus 50%. Those are pretty special deposits, and the reason it has that is it's very high grade. It's amenable to low cost mining and low capital structure. So that's the target. That's what we're looking for, and we feel like we have a good piece of one already. So where we are, we're in an accessible part of Alaska. We're just off of Cook Inlet, pretty mild coastal climate as far as Alaska goes, and communities not too distant that can help support our activities in the area. The deposit itself is very high grade. I can say it now. We just had a news release cross the wire. We just came out with the maiden resource estimate for this project. I don't have it in the slide deck because I wasn't sure it would get across the wire in time. But anyhow, we've got a very high grade resource. And really what sets us apart is its, I guess, its geometry. We've got the kind of grade you typically associate with narrow, high-grade underground mines, but we've got the widths and dimensions that are more commonly associated with bulk mineable deposits. And what that leads to is margin, and that's really what it's all about. I kind of tongue-in-cheek mentioned grade is king. What does that make margin? Does it make it margin god? And it really highlights the fact that margin is what you're after with projects, and you can't get any better when you've got grade, high-value rock, and low cost to get it out of the ground. So we have a resource out now. We've got a defined deposit. That would be the left side of what you see here right now. And then we've got a tremendous amount of exploration upside on this project. Our primary target is what we refer to as the northeast offset. So the bottom of the deposit's been faulted off and shifted to the northeast about 500 to 800 meters, sitting at depth. Past workers actually found the same type of rock and mineralization in that area, and it's sat open. And that's going to be our #1 target. We come back here to try and expand and grow our resource. But we have multiple other targets within the region. Bringing it back to value in terms of where we sit, you know, I put together a table of peer groups for comparison. This is a list of high-grade exploration stories in top jurisdictions. You know, top jurisdictions command a premium. Everyone here, whether it's Finland, Quebec, Ontario, Yukon, Alaska, they're all very good places to work, and they're kind of places people want to develop mines. Going down the list further, who's your shareholders? We've got a senior producer, got a mining titan in there. Most importantly, is what's your value, and you'll see that we're quite undervalued next to our peers. And that will do it for me. Thank you.
Thank you very much, Darwin. And this time, in fact, yes, I do have my audio on. My apologies for muffing your introduction. And last up, we have Matt Turner, Rockhaven Resources. Matt, your turn.
Great, thanks, Mark. And I guess everybody could tell by the change in the beard color from the picture that that picture was taken a while ago. But it was actually at CLAS. It was when we started out at CLAS in 2010. But before going, I'd just like to thank Mark again and Raj for the invitation to present today, and to all the people out there for tuning in. Again, my name is Matt Turner, President and CEO of Rockhaven Resources, and I'll be discussing the company itself and also our flagship Classic Gold Silver project located in Yukon. That is our forward-looking statement slide. Okay, because I thought I'd start off by sharing what is probably the main investment thesis, as this is an investing webinar. The first point really is you've got exposure to high grade, road accessible, and 100% owned ounces in the ground at 1.6 million ounces of gold equivalent at 5 grams gold equivalent. Plaza is one of the highest grade million-ounce gold deposits ever discovered in the history of the Yukon. We have a strong treasury, about $2.5 million, and we've raised over $4 million in 2019. Future milestones with the project will be an updated economic study and a large 2020 drill program testing new targets this year. So we're pretty excited about that. Okay, so looking at the location of the project, we're very well located, about 3 hours drive from the capital city of Whitehorse, and we're along a very favorable trend. It hosts other large deposits, including the coffee deposit that was, well, I guess not so recently, a couple of years ago, purchased by Goldcorp, and now it's owned by obviously Newmont Goldcorp. That sits about 100 kilometers or so along the way, and the casino deposit as well, which is a large copper gold deposit. So a very good area code, very good jurisdiction. And again, one of the few projects in this district that actually has a road to it. A few key points on the project. First off, like Johnson Tract, it's a epithermal gold silver deposit. It's high grade as well. We own it 100%, and also very important, there's no underlying royalties on the resource areas. It's a large property. It's about 287 square kilometers. And we've grown that over the last 10 or so years. You can see in kind of the blue box around the red star, which shows where the deposit is. That's where we started in 2010. So as we've learned more about the mineralizing system at Plaza, we've acquired ground to basically hopefully find more or make more discoveries. And then since 2010, we've done a lot of work. We're sitting right now just over 100,000 meters of total diamond drilling on the project, and then about 24 kilometers of excavator trenching, which has really helped us identified in the vein zones. Okay, I love this slide. It's an aerial view of the main Claza resource area looking southeast. In the far distance would be the town of Carmax. More closer, about 8 kilometers away, is the historic Mount Nansen gold mine. And again, it's I always say it's really, you know, God's gift to the mineral explorationist. You've got nice general topography. You've got you know, really nice network of roads, and also you've got placer gold mines all around you. You can see in the foreground, and you kind of make them out in the background there. There's gold in the creeks, and you know, we've done a lot of work to basically establish where a lot of that gold's come from, and a lot of it's obviously come from our project. If we go to the next slide here, we overlay the main zones. We're at 11 known main mineralized structures at Claza, and the resources, and I'll get into that I think in the next slide, is only hosted in a few of those zones. So we have a lot of expansion potential as we turn to the other zones that aren't in resources. We've also made a number of new discoveries over the last few years. One in which we expanded in 2019. The other one, the Victoria target in the distance there, that's one that we'll be looking at this year, hopefully. Okay, and looking at the numbers here, there's a lot of numbers. It's kind of a big table. I won't dwell on it, but it's more or less broken into two parts: the indicated resources, which accounts for about 60% of the total resources, and then in the lower part is the inferred. You can see in indicated, we're at about 4.5 million tons at 4.8 grams gold and 98 grams silver, so nice high grade. In the gold ounce category, that equates to 686,000 ounces gold and just over 14 million ounces of silver. In the indicated, 5.7 million tons at 2.8 grams gold and about 76 grams silver. So, and that's just over 500,000 ounces of gold and just under 14 million ounces of silver. So all in all, we're at about 1.2 million ounces gold and 28 million ounces of silver. Like I said, in total, if you factor in the lead and the zinc and account for metallurgical recoveries, you sit at 1.62 million ounces of gold equivalent at 5 grams gold equivalent. So a nice, healthy resource, obviously. Here's a look at the block model. That we've separated out here in red is the blocks of greater than 3 grams gold equivalent, and in gray, less than 3 grams. It's a big system. It for strike length, you can see kind of at the bottom there, 1.6 kilometers long, and on average depth is about 350 meters or so. So again, very, very big system. I include this because again, I just showed the total ounces. You know, one of the big things is how are we going to make this project bigger? Well, you can see some of the best holes to date are some of the deepest holes that we put into this system. The Central Claza zone, that tested the zone at about 425 meters below surface, and that cut just under 12 grams gold over 6.7 meters. Another one, the Western BRX zone, it's one of the kind of the crown jewels of the project. That deepest hole there, about 450 meters below surface, cut 1.37 meters of 16 grams gold and 1,400 grams silver, and 12% combined lead zinc. So a lot more to grow down dip, but there's also the potential to test some of these other targets that lay kind of in the outboard part of the resource area. In kind of the top left part of the slide here, you can see the Claza resource. So that's the arsenic and soil response over the Claza resource area. To the north is the Pearl zone. That's where we're expanding on a new discovery from 2017, getting some nice results out of that. The one that I kind of want to point out here is the Rust target. That's 3 kilometers more or less due south of the Claza resource area. It's a very large arsenic and gold and antimony and silver anomaly in soil, and that's never been tested by drilling. So that's for us this year. That's, I think, going to be one of the big tests. See what that has. But again, it's hard to find a target that's only a few kilometers away from a 1 million ounce gold deposit that looks that good and has never been tested. Okay, in closing here, we've got a really strong team behind the company. 187 million shares outstanding. We have an $18 million market cap and about $2.5 million in the bank, and a very strong group of shareholders. So there we go. I'll pass it off to you, Mark.
Thank you very much, Matt. And thank you, Darwin Green and Rob Cameron as well. So now what we will do, audience, is go to a panel discussion. And I'm actually going to change the order of questions a little bit. So if we get Matt and Rob and Darwin back on, the general question I have for the three of you, and I've known you quite a long time, as an investor, anticipating assay results always makes us optimistic, anxious, worried. Given that in gold exploration, visual inspection of the core often does not provide reliable indications of results, what is it like for each of you leading important programs that were months in planning, and then now you are waiting for the assay results that all of us are waiting for? So, Rob, why don't we start with you? What's that feeling like?
Well, it's humbling. When you've had a long career, you're exposed to a lot of disappointment when you see the assays come off the well, it used to be off the fax machine or in the mail, or now it's via email. But yeah, it's you learn really quickly. You can't anticipate or predict what gold grades are going to go like. Even the best looking rock doesn't necessarily run well. So yeah, it's agonizing, but it's part of the job, and you just have to flow with it. And you also have to have lots of holes and lots of numbers coming out so that you can see the broader picture, because it's not always about one assay.
Right. Darwin.
Yeah, well, you just got to be patient. I think in this business we've learned to be patient. So and keep busy on other things. I'm in a funny situation. We just came out with a brand new resource, our first resource, so it gave us an opportunity to have some news while waiting on the assays from our drilling in Ontario.
Very good. Matt?
Yeah, it's very difficult, the waiting game for the truth machine. But I do enjoy the anticipation of seeing what the results come back. But again, like Rob mentioned, it can be a bit humbling too sometimes.
Right. Well, in reverse order, I think a lot of investors are quite concerned about what COVID is doing to all sorts of plans, and it has impacted exploration plans, of course, as well. Can each of you give us a sense of what you expect the impact to be at this point? And obviously, you can't be held to it. We don't know what's happening for certain. Matt?
Yeah, for us, it's still kind of too soon to say. Mineral exploration has been deemed an essential service in Yukon, but we're still waiting on, basically to get as much data as possible before we make the decision about 2020 exploration. We did plan to have been in the field by June 10th this year, if all this stuff hadn't happened. But again, we're just gonna kind of see how things play out. And for the Yukon too, there's only been a few cases up there, so there is kind of ideas in motion there to maybe go just like with a full, just all Yukon team. But again, we've got to kind of look at everything and keep in mind, the health and safety of our workers in the local town is the most important thing.
Right. Darwin?
Yeah, well, it's I think we responded pretty quickly with our program in Ontario, and we ended up having to shut things down there midstream, and we're able to do it in an organized way with planning. But it's certainly been a lot of work now, working with various industry associations and other people within the industry and government agencies to come up with a plan. I think there's certainly for governments, there's an economic imperative to start getting some business back at some point, and it's very project specific. I think how you can execute certain projects are isolated from communities where people can get to and from without impacting those remote communities, and I think everyone on this panel will agree. In addition to ensuring the safety of our own employees and contractors, it's the safety of the communities where we operate, where we work very hard to build trust over time that we're concerned about. So there's a lot of work that goes into planning, but I think it's going to start opening up. When you we are in kind of our own little isolated quarantine, if you will, when you're in most of these exploration camps, and that in a lot of situations. So it is one of the safer industries to work at. And certainly in the US for our flagship project, it's been deemed an essential industry. You know, and what we've done is we've pushed our start time back about a month to buy us more time. So we'll probably starting in early July rather than June, so we can do it in a very orderly way and ensure we have good plans in place.
Good. Rob?
Well, I guess we're pretty much in the same boat. As a prospect generator, we're of course, you know, small crews, early stage work programs, and we're not mobilizing heavy equipment in that. That's different for our partners, so we'll see how they address the issues going forward. But, you know, I'm not really anticipating any field work until August at the earliest, most likely a rush field program in the fall. But on the other hand, you know, as a prospect generator, it's all about generating the next few projects coming down the pipeline. So we're active right now, scouring databases, compiling regions, selecting ground that we might want to work on going forward. So it has given us a little opportunity to do a lot of that homework that we don't really have a lot of time to work on. But I think things will flow, and it'll be sort of later in the season before we really get comfort on actually launching on a field programs.
Okay. Excellent, responsible responses that I would expect from you, all you three gentlemen. So each of you are geoscientists, and you've each driven acquisition of unique assets. Tell me a little bit more, or tell all of us a little more about how you've made those acquisitions. Rob?
Well, I mean, Commander's not really major acquisitions, but in my career, I've had a few. It's really hard. It's all about networking. A lot of this isn't something you uncover by looking on a website. It really is networking, knowing your, relying on your own personal history and your own knowledge base from what you've seen over time, and just drawing on from experience. We know who the players are. We know where some of those hidden gems might be, and we draw on that a lot. And then also your network brings you opportunities as well. So it's not strictly driven by yourselves. It's driven by your environment and your contacts and your knowledge and experience. So that's why experienced teams are important.
Okay. Darwin?
Yeah, I would agree with Rob on a lot of his points there. The network matters. There's an element of being able to see something where other people don't see. You know, you might see something different that other people have seen. They walk over the same thing and not see the opportunity the same way. You know, networks manifest themselves in different ways. You know, it really has to do with the history of where you've been and who you meet. For us, the most relevant example for Highgold is our acquisition of Johnson, which is our flagship, and really was the catalyst to form the company. You know, our management team has a long history in Alaska, and, you know, we've built up network reputation, whatever you want to call it, up there. And we were approached by one of the native corporations with this. And Alaska is a pretty unique place. They settled native land claims disputes in the 70s, and they created 12 regional native corporations who owned the lands and owned the mineral rights. And so, you know, there's good examples out there. Red Dog Mine, you know, operated by Tech, Donlin. Anyhow, that group approached us with this asset due to our history up there, and it was one. And then it's not just being made aware of an asset. There's a lot more work after you've been made aware of it to actually close a deal on some of these projects too. And for every project that you see a company have, there's probably 5 that got away on them because you just couldn't get to an agreement. So there's 2 sides to it all.
Yeah. Matt?
Yeah, I'd say experience, geologic understanding. Those were, I think, 2 of the big things with us at Claza. We started in an area where the old timers had been looking, and we really liked the rocks, the host rocks. Funny enough, the veins themselves looked interesting, but it was really the fact that we had you know, nice, brittle, competent host rocks that seemed to make up that whole kind of whaleback hill that hosts our deposit. And so as we progressed out along trend of these main structures, again, that the old timers were looking at, the veins, as we got into what's now known as the more distal part of the system, the veins got wider and they got higher grade. And so, you know, looking back on when we started in 2010 and where we started on the project. It really comes back to experience, understanding the system, and a bit of luck involved here. That's you got to admit that on most of these discoveries. There's always that element.
Right. So we've talked about a little bit about how you acquired those projects. Let's hear from each of you about what you think the most unique thing about your flagship project that it possesses that perhaps either people don't realize or fully appreciate. Matt?
I think for Claza, I'd say it's the deposit type. It's akin to Buritica, Porgera, some deposits that are plus 10 million ounces in size. One of the main reasons why they're epithermal deposits, but they've got, I don't want to say they're endless, that the roots are endless, but they go vertically a very, very long distance. And again, for us, typical epithermals, you're dependent more on pressure and temperature, and you've got this, pretty small vertical window where you've got the high-grade mineralization. But for us, what we've got at surface extends down to almost 500 meters to our deepest holes, and there's no indications that it's weakening. So that's, I think, what a lot of people don't realize. The big thing for us as we start wrapping economics around the deposit, going deeper isn't essentially good for that. Like, it'll add more resources, but it will, those resources won't be developed until year 12 plus of the current mine model, right? So it for kind of when you're looking at payback and all those important economic things, you're really focused on where you can find more near surface mineralization.
Right. Darwin?
I have to just pick one, huh? Yeah, I think certainly one of the pieces that I don't. Sorry, do you guys get feedback at all on this, or is it just me? Yeah. Okay. Anyhow, one of the bigger pieces I think that is not fully recognized. I think people recognize, but maybe don't fully appreciate the importance of is width and mineability. We focus on grade often in mineral deposits, but just that combination, it's really quite a rare combination to get the kind of horizontal mine widths and steep geometries that we see at Johnson that come along with the widths, and that really puts it in a special class, in my opinion, for projects like that. And then the other piece that I'd like to mention is just the exploration upside. It's a funny project that it's sat there for really no good reason for 25 years, and to have something that's got such a substantial starter point to it already with so little exploration out beyond that is a real opportunity for us, and that's certainly a message I like to communicate.
Okay, so Commander is unique from the other two in that we don't have a single asset that I would say is a flagship, but the key takeaway and the strength of Commander is the business model, prospect generation, and it's a difficult concept to get across. So I think if I had to emphasize anything, it's our business model. We generate a royalty portfolio organically. We generate an investment portfolio over time, and we expose our shareholders to potential discoveries on multiple fronts, all funded by our partners. So it's a very disciplined approach. It preserves our treasury. We don't need the same sort of capital flow and raising that others use, and yet we are still exposed to potential discoveries down the road funded by our partners. So I think the key takeaway for us is we're a different business model in a sense, and getting that business model and the reality and what that means across is a challenge for us, and we're always trying to articulate it in different manners. But that's our main goal here. We're a prospect generator. We've got a large portfolio of projects concentrated in Canada. We're 70% gold weighted, 3 active joint ventures. Most importantly, we have a significant royalty that should be cash flowing and relatively soon with Maritime Resources on their Hammerdown Gold project.
Thank you, Darwin Green.
Thanks, Mark. Yeah, Highgold. We've got a nice treasury. We're cashed up. I think that separates us apart. We've got a phenomenal deposit. and we're really excited about where we're going with it. We feel like we've just, we've come out with a resource, but it's really just our starting point and places us well down the track. Thank you. Thank you all.
Thank you, Darwin Green. And Matt Turner.
Okay, so for Rockhaven, 1.6 million ounces at 5 grams with a $18 million market cap. So whatever that puts you at, $12 an ounce in the ground for a high-grade deposit that we own 100%. And the favorable jurisdiction, road to it, all the key features people look for. So keep following us. It's going to be hopefully an exciting year.
Very good. Thank you very much, Matt Turner. I'm really pleased that our opening session was done with these three gentlemen: Rob Cameron, Commander Resources; Darwin Green, CEO of Highgold Mining; and Matt Turner, CEO of Rockhaven Ventures. And we want to thank all of you and our attendees, and we apologize for that slight glitch. Thank you for staying with us. Do go to the company websites and CEDAR and learn more about these companies, and check back at takestocklive.com. And we'll see you back here, same time, 2:15 Mountain, next Wednesday for the CHF Capital session to hear from 3 tech companies. Thank you very much, everyone.
Thank you.
Thank you.
Thank you. Bye now.
Thank you, Mark.